Hello everyone, I'm Jamie Holmes. A few months ago, we told you about an acronym that investors in emerging markets are already familiar with, CIVETS. It stands for Colombia, Indonesia, Vietnam, Egypt, Turkey, and South Africa. Markets that represent exciting new opportunities for bold investors. As we approach the new year, those countries offer better prospects for growth than ever before. So we've decided to re-air this episode of Money in Markets. We hope you use the advice it contains to make 2011 a very profitable year.
From our studios in Jupiter, Florida, Weiss Money Network presents Money and Markets. And now, Jamie Holmes.
Hello, everyone. When we refer to the BRIC countries, Brazil, Russia, India, and China, the term emerging markets, well, it may already be dated. So for our roundtable on emerging markets, we're looking beyond the BRICS and helping you find investment opportunities off the beaten path. Joining us on set today is Rudy Martin. He's the publisher of the Latin Stock Investing newsletter. Tony Sagami is an expert on Asian stocks at Weiss Research. He's joining us from Seattle. And from Bangkok, Thailand, Larry Edelson, a financial analyst for Weiss Research, specializing in international macroeconomics. Rudy, I want to start with you. Where are you seeing opportunities outside of the BRIC nations, not just in Latin America, but the rest of the world?
Yes, I do see a lot of opportunities in the region, in emerging economies. But before you consider other areas, you need to consider the impact of Brazil on the region. Brazil dominates Latin America in much the same way that China dominates Asia.
Okay, I think that's a good point. Larry, you agree then with Rudy that these regions are going to be dominated by their bigger economies, and specifically, like Rudy said, in Asia, it's going to be dominated by China.
Yeah, absolutely, Jamie. China, is about to pass Japan as the world's second largest economy, putting it right behind the United States. So, of course, it exerts a huge pull on the rest of the region. It's fair to say that as China goes, so goes Asia. And recently, China's economy has been incredibly strong. So that translates into huge growth and investment opportunities throughout the region.
Tony, what are you seeing in these emerging Asian economies, specifically the ones outside of China?
Oh, I agree. There are tremendous investment opportunities in markets all over Asia. One of the things I look at the most is shipping, because I think that's a great indicator of economic health, and one of the gauges that I look at is global cargo shipments. The International Air Transportation Association reports that they're up 18.5% this year, and that's just over the first 6 months. But most of that growth is coming from Asia. According to the air cargo world, a full 45% of all global air freight either originates or is shipped from Asia. And it's just not China we're talking about, where we're seeing these impressive economic numbers. Singapore's exports jumped by 53% in June, 53%. What's even more impressive about that number is that 80% of those exports went to other Asian countries and only 20% to North America and Europe.
Larry, from a macroeconomic standpoint, what do people need to understand about Asia when they're looking for investment opportunities there?
Well, I think one of the most important things right now, Jamie, is people need to understand the effect of politics and geopolitical tension on the economies of Asian countries. It's often overstated by the Western media. In Thailand, for instance, where I live now, we recently experienced a civil war here. But stocks here barely took a hit, and stocks are up more than 30% in Thailand over the past year. In China last year, we hear a lot in the Western press about some 60,000 protests. But what's not being reported in the Western press is that only about 2% of them were directed at the government's economic policies. 98% of them were about environmental situations. So when you hear about political unrest as a threat to Asian economic growth or your investments in those countries, you have to look at it twice. I think it's a fundamental misunderstanding of the Asian culture. Asian people have a long tradition of following their leaders, and they continue to have confidence in them. So investors shouldn't worry as much about political factors when weighing in whether or not to buy Asian stocks, in my opinion.
Rudy, which sectors of these emerging economies are you seeing the most opportunity?
Well, the obvious choice is commodities. There have been a lot of investors who have made money by investing in material stocks. But beyond the material stocks and the commodities, I look at two sectors, infrastructure and telecom. And what I'm referring to in infrastructure is if you take a look at a Brazilian infrastructure fund and look at the composition there, you'll see independent power producers, logistics companies, companies that you couldn't normally invest in that are really probably best invested in through an ETF structure. By the way, there's a Chinese version of that, and that's up 15% just in the last 3 months. In addition to infrastructure, I also like the opportunities in telecom, not just in the region, but in all emerging economies. Recently in the news, you had the battle for control of a Brazilian company, and the key there was Brazilian subscriber growth in the wireless area is growing over 20% a year, and that's a very rare thing that in terms of growth to actually see that. And for that reason, Telefonica and Portugal Telecom were most interested in buying out Brazilian companies and telecom companies. And I think there are going to be some opportunities in other emerging economies.
Larry, we're talking economics here, of course, and of course that means a lot of acronyms. The one getting a lot of attention from investors lately is CIVITS. I know you know this. It refers to Colombia, Indonesia, Vietnam, Egypt, Turkey, and South Africa. Markets where investors are finding a lot of new opportunities. Let's focus on the Asian countries on that list. What are you seeing in the Vietnamese and the Indonesian markets?
Well, Vietnam is just now becoming a viable market for American investors. The easiest way to invest in Vietnam right now is through ETFs and mutual funds rather than individual stocks. The largest exchange-traded fund for investors on Vietnam is the Market Vectors Vietnam ETF, symbol VNM. I see Indonesia also as a great opportunity, much like Canada was 100 years ago. Indonesia has vast natural resources, copper, oil, palm oil, cement, natural gas, and it's just now starting to develop, truly develop the infrastructure to exploit those natural resources on a big scale.
Tony, what's your take here? Indonesia and Vietnam, your thoughts?
Well, Indonesia is experiencing some huge growth. Its economy grew by 5.8% in the first 6 months, and for the full year it should be about 6%. Now, I'll give you an example. Indonesia's state-owned shipping port is so optimistic about its economy that it expects cargo container traffic to increase more than 100% over the next decade. And it's planning an expansion that will make it the biggest port in the world, even bigger than the Port of Los Angeles. You know, that prosperity is being reflected in the Indonesian stock market too, and it's now sitting at an all-time high. Can you think of any North American or European stock market can that make anywhere near a similar claim? Nope. And let's skip over to Vietnam. Now, Vietnam's stock market has been moving in the opposite direction since hitting a record in March of 2007. It's moving more now in tandem with the Chinese stock market. But the Vietnamese economy grew by more than 6% in the second quarter, and its per capita income is up nearly 5-fold higher than it was in the mid-1990s. You know, that new wealth is showing up in gold purchases too. According to the World Gold Council, net retail gold investment in Vietnam topped 500,000 ounces in the first quarter. That's a 36% year-over-year increase.
All right, Rudy, we're going around the world again. Turkey, the letter T there in CIVITS. What opportunities are you seeing in Turkey?
Before I go making an assumption about our country, I look at 3 factors when I consider investing in a region. And the first is the income trends, the second are population, and the final are national ratings trends. And in the case of Turkey, these are all positives. Now, first, it's important to, as I say, follow the money. According to Forbes magazine, there are 28 billionaires residing in Istanbul. That tells me that there's a lot of high net worth individuals there making money off the market. Turkey ranks 4th in the world behind New York, Moscow, and London in terms of the top billionaires. But that wealth isn't just at the top levels. If you look at the Istanbul stock market, that was the second hottest market last year after Argentina, one of my favorite markets. That Istanbul market basically doubled last year. And so from an income trend and a performance trend, there's an opportunity there. Second, I look at the labor force. The average age of the Turkish population is under 28 years old. That's a dynamic, vibrant workforce with falling unemployment rates. And finally, I consider the sovereign debt. Now, rating agencies don't always get it right, but it's nice to get concurrent confirmation. And in the case of Moody's and Fitch, we had 2 rating agencies last year both upgrade Turkey, and a very rare thing happened. Fitch actually upgraded it 2 notches. So I see a rare investment opportunity for investors looking at putting money into Turkish stocks.
Okay, Larry, back to you again. The last letter of Civit stands for South Africa. What's your take on that economy?
Well, Rudy mentioned that Brazil dominates the Latin American economies, and of course we all know China dominates the Asian economies. South Africa, in much the same way, dominates Africa. And in relation to the other sub-Saharan African economies, South Africa, all of Africa for that matter, is already a huge producer of natural resources, not just gold and diamonds, but also platinum, copper, coal, oil, many rare earth metals. That production is just going to increase in the future as the global appetite for natural resources continues to grow. And South Africa now also has a robust stock market. But, you know, going back to the theme of Chinese economic dominance throughout Asia, we have to remember, you know, South Africa is becoming heavily dependent on China. And as China goes, China's picking up the boots for South Africa.
Okay, Larry, hey, thanks for being here. We appreciate it.
Thank you, Jamie.
We're going to delve deeper into another Civit's country, and that's Colombia. That's going to be with Rudy Martin right after the break. A bit later, we're going to bring Tony Sagami back for a discussion of China's economic future and why it's so important to investors here in the U.S. Also, be sure to stay tuned for a closing commentary from Martin Weiss. First, though, we want to hear from you. If you have questions for any of this week's guests or suggestions for topics that you'd like us to cover, just email us at weissmoneynetwork@weissinc.com. Money and Markets will be right back.